Welcome back to the deep dive. Today, we're jumping right into something everyone seems to be talking about. Passive income.
Yeah, it's definitely got that allure, hasn't it?
Absolutely. That promise of, building something that makes money for you, maybe alongside your main job or for retirement, maybe even becoming the whole thing.
It really is the dream for a lot of people. But we probably need to start by tackling the biggest myth right off the bat.
Which is?
Well, that financial coach, Todd Tresidder, really nailed it. People often think passive income is like getting something for nothing.
Right, like money just magically appears.
Exactly. And the reality, it's rarely truly passive, is it? It usually means you're swapping something else in, either a huge chunk of cash up front or, a massive amount of your time and effort at the beginning.
So you front load the investment, either time or money.
Precisely. You put in the work or the capital first.
Okay, so that's our mission for this deep dive then. Let's explore that whole range. We'll look at the capital-heavy stuff, the investment streams, but also the more creative hustles that need more time than cash. We've got, 24 ideas to touch on?
Yeah, about that. And then we want to really dig into one specific, very modern example, right? The AI-assisted animation thing.
Exactly. AI-assisted stick figure animation. It's a perfect case study for how technology is kind of substituting for that human time investment we just talked about.
Sounds good. So where do we start? Creative paths first.
Yeah, let's do the creative ones, the ones that really demand your time and maybe your expertise instead of a big bankroll. Ebooks seem like a classic starting point.
They are. And the barrier to entry is, almost zero now, isn't it? Low publishing costs, platforms like Amazon giving you global reach.
But just like writing something and throwing it online, that feels a bit like shouting into the void, doesn't it? What's the actual strategy there?
That's the key insight, I think. The ebook itself often isn't the real product. It's more like the entry point to a funnel.
Okay, explain that.
So your ebook, maybe it's fairly short, 30, 50 pages, really focused expertise. It acts kind of like maybe a loss leader. Its main job is actually to pull people towards higher value stuff.
Like what?
Private seminars, maybe paid video courses, exclusive online groups, things like that. If you don't have that back-end offering, or at least a solid way to market the book itself, like a website or media appearances, all that upfront writing effort might not give you much return.
Okay. So it's part of a bigger content strategy, not just selling a book.
Exactly. It's about building an audience and then offering more.
Makes sense. Okay, another creative path, selling designs online, like T-shirts, mugs, that sort of thing. I see those everywhere.
Yeah, using platforms like Zazzle, Etsy, maybe Vistaprint. It lets you jump on trends or current events really fast.
And the appeal there is low capital, right?
Totally. Because the printing partners, they handle the stock, the printing, the shipping. You just upload your design, set your price, and they manage the physical side.
But the risk is still your time, I guess.
Oh, absolutely. It can be a massive time sink if you don't already have a following or a really unique style. Or maybe if you're not already doing design work anyway, you could spend ages on it for very little payoff.
Right. Okay, stepping up the risk-reward ladder a bit, creating an app.
Yeah, that's definitely higher stakes. If your app catches on, maybe a clever little utility or a super addictive game, the potential upside is huge.
And how do they make money? Ads, fees?
Usually in-app ads or sometimes a small download fee, but it's a very crowded market.
I bet.
And honestly, the complexity now, especially around data privacy laws and compliance, it's way harder than just sticking a design on a T-shirt. Plus, app popularity. It can be incredibly fickle, short-lived, unless you're constantly updating and improving.
Okay, got it. So lots of upfront time, varying risk levels on the creative side. Now, let's switch gears completely. Let's talk about the capital-intensive side, the stuff that feels more traditionally passive.
Right. This is where your money does more of the heavy lifting. Dividend stocks and ETFs are probably the most common examples people think of.
So you put up the cash, buy shares, and the company sends you a check every quarter from its profits.
Basically, yes. It's pretty passive once you've made the investment. But you obviously have to choose carefully.
How so?
Well, sometimes those really high dividend stocks can be a bit risky. The company might be stretching to pay it, or its business might be shaky, so they might not be able to sustain those payouts.
So look beyond just the yield number.
Definitely. That's why author John H. Grace often recommends exchange-traded funds or ETFs, especially for beginners. They're generally safer.
Because they hold lots of different stocks.
Exactly. Diversification. They spread your risk across maybe dozens or even hundreds of companies. So if one company cuts its dividend or its stock tanks, it doesn't wipe out your whole income stream.
But hold on, if I'm chasing serious wealth growth, aren't safe, diversified things like ETFs going to give me pretty, well, average returns? Isn't that the trade-off?
That's a fair point.
Yeah.
You are trading that explosive growth potential for more stability and hopefully reliable income. It depends on your goal. If your main aim is passive income, meaning regular, predictable cash flow without constantly watching the market, then yeah, ETFs and other safer fixed income assets are usually the way to go.
Okay. Speaking of safety, what's the absolute safest?
Well, you can't get much safer than high-yield CDs or savings accounts backed by the FDIC. Your principal is guaranteed up to $250,000 per person per category.
That's rock solid. But the return often struggles to even beat inflation, right?
That's the big downside, yeah. It's safe, but your purchasing power might actually go down over time.
So maybe something a little more sophisticated but still focused on income and relative safety?
You could look at a bond ladder. It's an interesting strategy.
How does that work?
You basically buy a series of bonds that mature at different times. Say one matures in 1 year, another in 2, another in 3, and so on.
And benefit.
It mainly helps reduce reinvestment risk. When a bond matures, you get your principal back. But interest rates might be low right then. With a ladder, only part of your money is maturing at any one time, so you're not forced to reinvest everything when rates are bad. You just collect the interest payments along the way and roll the proceeds into new bonds at the end of the ladder as they mature.
Okay, that makes sense. Diversifying over time, not just across assets. Now, what about real estate? Everyone talks about real estate income, but managing properties sounds like a nightmare. Midnight calls about leaky toilets.
Right. Not very passive. That's where REITs come in. Real estate investment trusts.
Ah, I've heard of those. You buy them like stocks.
Exactly. And they're powerful for passive income because of their tax structure. They generally don't pay much corporate income tax if they pass most of their income, like rent from properties, directly to shareholders as dividends.
So you get real estate income without being a landlord.
Pretty much. And you can get exposure to all sorts of properties, offices, apartments, malls, warehouses. Plus, you can diversify easily by buying a REIT ETF, which holds lots of different REITs.
Sounds almost perfect. Good yields, diversification. What's the catch?
Well, volatility is one. REIT prices can swing quite a bit with the economy. And unlike bond interest, those dividends aren't guaranteed. In tough times, REITs can and do cut their dividends.
Okay, so still requires some due diligence. That gives us a really good map, though, from ebook funnels needing time to REITs needing capital. But there's always the tax ban, isn't there? If you actually succeed in making money online, the IRS wants its cut.
Oh, absolutely. That's the thing you just can't avoid. And they've really shaken things up with the reporting rules lately, especially for online income.
This is crucial because the IRS definition of passive income earnings from rentals or business where you don't actively participate is one thing, but reporting the income is another. You have to report it regardless of participation.
Correct. All income needs reporting. And yeah, the big change is the 1099K reporting threshold.
That's the form platforms like eBay, Etsy, PayPal send out.
Exactly.
Yeah.
It used to be they only had to send you one if you made over $20,000 and had over 200 transactions. That's gone?
What is it now?
Well, for the 2023 tax year, it dropped way down to just over $5,000 in total payments, and it's scheduled to go even lower.
How low?
The plan is $2,500 for 2025, and then eventually just $600 by 2026.
Wow. Okay, so way more people are going to be getting these 1099K forms, people just selling stuff occasionally online.
Millions more. It means the IRS is tracking a lot more online activity. I suspect a lot of people doing, online garage sales are going to get a surprise.
Right. So what exactly needs to be reported then if I sell my old laptop online for less than I bought it?
Okay, good question. If you're a business, you report all income. If you're selling a personal item, like your old laptop, for less than you paid for it, you don't actually owe tax on that money. But technically, you should still disclose the sale to show it wasn't income.
And if I sell it for more than I paid, like a collectible I bought years ago?
Then that profit is taxable. It's treated as a capital gain. You'd report it using Form 8949 and Schedule D.
Okay, so whether you're making money from REIT dividends or selling designs on Zazzle, the key to managing the tax side is to treat it like a proper business operation.
Absolutely. That's the smart way to minimize liability. First step, make it legit. Set up as a business, maybe get a tax ID number from the IRS.
And then?
Once you have that business structure, you can unlock some powerful tools, like opening self-employed retirement accounts, a solo 401k, or a SEP IRA.
And those let you save on taxes.
Significantly. You can contribute a good chunk of your passive business income into these accounts, and you get a tax deduction for it now. The money grows tax-deferred until retirement. It's a huge benefit for compounding wealth.
Great advice. Okay, let's take everything we've discussed, the upfront effort, the leverage, the business side, and apply it to that cutting-edge creative stream we mentioned, AI-assisted animation.
Right. This really highlights this shift from manual labor to, well, strategic prompting.
Before AI, if someone wanted to start, say, a viral animation channel, which falls under that high-effort, low-capital category, where might they have begun? What tools?
A common starting point, especially for stick figure stuff, was a tool called Pivot Animator.
Pivot Animator.
Yeah, it's a very basic, free 2D stickman animator. It works frame by frame. The key thing is it doesn't do tweenings, automatically creating the frames between key poses.
So the animator had to draw every single tiny movement themselves.
Every single one. To get smooth motion, you had to manually position the figure in each frame. It took a huge amount of time and patience, real labor intensive.
Okay, so that manual labor is exactly what AI is now replacing, or at least augmenting. Let's walk through the modern workflow for AI-assisted stick figure animation, like those Rico animation style channels.
Yeah, it's like an assembly line, but using different AI tools chained together. And beginners can actually do a lot of this with free or low-cost options.
Step 1.
Scripting. You'd use a large language model, like ChatGPT, but you need to be specific. Ask for scripts, maybe single or multi-person conversations. Then, crucially, identify your characters and get detailed descriptions.
Why detailed descriptions?
For consistency, you need to define their head shape, typical expressions, clothing details, all described clearly so you can hopefully get the same character generated later across different scenes.
Makes sense. Consistency is key for characters. Okay, script and character descriptions done. Step 2.
Image prompts. You take your script, scene by scene, and use the language model again to generate specific prompts for the visuals. And you have to force the style. Simple black-on-white line art. No color, no shading.
Got it. Then feed those prompts into an image generator.
Exactly. Something like Leonardo AI, which gives you some free credits daily. You'll need to experiment with different models, maybe one that's fast and good at simple styles, like Flux Schnell is one suggestion. The really critical part in the prompt itself.
What's that?
You have to explicitly put stick figure right before the character's name in the prompt and specify the style you want, like dynamic or illustration. That helps keep it in that simple line art territory.
Okay, so now I have my static black and white stick figure image. How does it start moving?
That's where a specialized video generation AI comes in, like HeyGen AI. You upload your stick figure image.
And just tell it to animate.
Not quite. This is maybe the most important trick. You need to use a very specific prompt structure when you ask for the animation. You have to tell the AI explicitly to maintain the black and white line art style and not add colors, gradients, or shading. Otherwise, it might try to enhance it.
Control the AI creative impulses.
Precisely. And you'd likely choose a model designed for 2D illustrations. They mentioned the 12v1 live model as an option. Then you tell it exactly how the figure should move or what action it should perform for that shot.
Wait, so if character A has like 3 lines of dialogue in a row, can I use the same static image I generated for all 3, just changing the animation instruction each time?
That's exactly the efficiency gain. You reuse the base image to keep the character looking identical and just change the animation prompt, make him nod, make him gesture, make him look surprised for each line or action.
Wow, okay, that saves a ton of image generation time compared to making a new image for every single frame or line.
Huge leverage. The AI handles the frame-by-frame work that the Pivot Animator user did manually.
Okay, images animated. We need voices now, right? Static animations need dynamic audio.
Definitely. For voiceovers, you copy the dialogue text from your script, just the spoken words, remove scene directions, and feed it into an advanced text-to-voice generator. Something like 11 Labs is well known.
And you can choose different voices.
Yep. Assign distinct, suitable voices for each character. Maybe a gruff Bob voice, a clear Sarah voice. Generate the audio files for each line.
Last step, putting it all together.
Final assembly. You bring the animated video clips and the voiceover audio files into a video editor. CapCut is a popular free option. You line them up on the timeline.
Let's sync everything up.
Exactly. Add maybe some text overlays at the beginning to hook viewers fast. Split and trim the animation clips so the movements and lip sync, if any, match the timing of the voiceover lines. Maybe add a few simple sound effects for impact. It becomes less about artistic drawing skill and more about workflow management and strategic prompting.
It really is a fascinating shift. You're leveraging these powerful AI models, drastically cutting down that massive upfront time investment that used to kill most amateur animation projects before they even got started.
Yeah, the barrier is shifting from time and skill to strategy and tool proficiency.
So reflecting on this whole deep dive, it really shows that passive income, whatever path you choose, is fundamentally about leveraging some form of capital efficiently.
Right. Whether that capital is your money, like in REITs or bond ladders, or your time and technological know-how, like with the AI creative stuff.
The core idea is the same: strategic allocation of resources to build something that generates returns with less ongoing direct effort. But, thinking about that AI example and connecting it back to the tax discussion, it raises a really interesting question.
What's that?
We talked about how the IRS looks at active participation, partly to define income and tax treatment. So if the entire creative process, the writing, the drawing, the voicing, the animation, is increasingly done by AI models that you just set up with some initial prompts and parameters, how long before that legal and tax definition of active participation needs a complete overhaul?
That is a fantastic question. When the work is done by an AI you prompted once, are you actively participating anymore?
Exactly. Where does automated strategy fit into a definition built around manual labor? Something definitely worth mulling over as these technologies evolve.
Absolutely. That's probably the multi-million, maybe billion-dollar question for tax lawyers and policymakers in the coming decade.
Indeed. Well, we've covered the spectrum, the compliance essentials, and a cutting-edge creative workflow. Hopefully that gives everyone listening a solid foundation and maybe some inspiration. Now go out there and start leveraging your capital, whatever form it takes.